What's up, folks? Now I'm coming at you today with an update video on Wealth Mountain. Now, first things first, congrats to the protocol and to everyone involved. We finally reached our 2 million TVL milestone. So that's a pretty impressive milestone. Next one is 5 million. I'm gonna talk today about what this means for the protocol, so my own personal thoughts, and also I'm gonna touch base on the portfolio dashboard and see where are the investments at and show you what are the potential returns and how can we as a community expect from this protocol moving forward, as well as the recap, so everything that you've missed since the last video basically. So without further ado, let's get into this. Alright, so first things first, let's go over the portfolio dashboard. So last time I covered Wealth Mountain, I actually showed you guys a small preview. So it was a picture basically of how this would look like because it wasn't live. It went live the next day and it looks exactly as it should. Now, first things first, you have all the investments across all chains. So we hit some milestones, so 100k plus on both Avalanche and Ethereum. That's awesome. So the treasury I discussed, it's basically for angel investments and you cannot take more than 25% for a single project. There is an ongoing project that actually had an angel investment. I'm gonna show you that. But what I'm most interested in are these two right here. First things first, you can track the holdings in any of these platforms. So I chose DBank. Now, unfortunately, it's not gonna show me everything because we're a bit 10k short. We're about 10k short. Because if you take into consideration the staking fee, which is 10% of the total TVL, so we should be at about 200k right here. The various investments are shown, so whether it's staking, lending, ROI, whatever it is, I'm gonna discuss this in my spreadsheet because it's where I'm gonna talk about my personal thoughts as well as how this investment could potentially perform overall. There are several scenarios because again, if you go from a low risk to high risk type of investment, lowering your capital as you go on with the risk tolerance, then you can expect various returns. So very simple, you can track everything here. And the checklist itself, now you can go through it. What I liked, other than the various AMAs that they keep on onboarding, they actually plan on doing some spot trading because right now the market is in a downturn for everything that's happening in the world. So if they can position themselves well in the blue chip markets downtrend whenever there's a reversal, which we can expect. Now the time frame of that cannot be determined. However, when this happens, all this extra yield would go back, either be reinvested for more or potentially reward everyone. So the TVL to treasury ratio, we discussed this. Now, one thing I would add here is that maybe it should be a bit easier to pinpoint the total value of transaction on a daily basis, because here you can see the number of transactions, whether it's staking, unstaking, reward taking, whatever it is. So this is nice, but it doesn't show you the full picture of all the incoming buys versus all the incoming dividend taking. So I would add this. So I would add numbers here. I also would add percentages, even though if you go over, you can see how much money is invested into each category. But I would also add percentages to get a clearer picture of the allocation itself. So here I labeled in my spreadsheet all the investments that the protocol has right now. So in terms of how much money is invested, the risk, and the returns, actual ones and potential ones. Now, keep in mind that all the projections are not 100% accurate. Now, of course, if it's a safer investment, you can get almost a guaranteed return. But whenever we go from low to medium to high risk, then the potential returns can either be exponentially higher or exponentially lower. So again, you invest less as you risk more, and that is what the team has done. So first things first, the low risk part are mainly lending and liquidity, and it's actually where most of the capital is. So you can clearly see, if we quickly sum them up, that's about 120k out of 200k, so that's about 60%, and most of it has a small API return, as it is expected. It's either a stable staking situation, or it's just a lending situation. And the returns are not very impressive thus far, because you need a lot of money to generate a lot of returns, but those are guaranteed ones. Now going into the medium risk, it's mainly staking, and there's only one angel investor that took money thus far. So the staking part is actually pretty interesting, because these launchpads like DEFI and BSC pad, their tokens are at a low right now, and so purchasing them and staking them is almost a guaranteed return. Again, there's nothing guaranteed, keep that in mind, but the potential return outweighs the potential risk of falling. So that's one thing. But those are staking rewards for the token itself. But the launchpad gives you incentives if you own the token to enter the ICOs they put together. So if you do that and you get a high return on this, then all of these are additional yield. So I'm gonna actually show you how I labeled all of this. The angel investment, it is a medium risk, even though the terms are set between the team and the project itself, but it's still a medium risk. Why? Because if the project defaults and cannot pay back, perhaps there are contingencies, but we're not sure how. So I decided to put it there. Going into the high risk, and those are mainly the degen plays, we're talking about ROI dApps mainly, as well as liquidity with high returns. Now, even on PancakeSwap, there are liquid pairs that offer you more than 150% APYs, but again, the token you're pairing cake with is potentially either new or of very high volatility, hence why the high APY. So that's MDB's case, and the ROI dApp case is basically you putting your money somewhere and you expect 1 to 5%. Now 5% is super degen, so but in Wealth Mountain's case, we're talking actually 0.8 to 1.5% in most of these. So in the four ROI dApps that they have invested. Again, this is on the low high risk part, but it's still high risk. Why? Because these assets have price actions of themselves. So if they plummet, they will take down the investment with them. But if they appreciate, the returns are going to be much higher than what you most probably would expect. And that's why I actually have 3 types of returns. So first things first, you have the safe ones. You have the excess returns in case the market acts better than we expect, and you have the moon ones where the platform you invest in could do something exponential. Now the safest, or I'm gonna call them the expected returns, are about 60k for our investment right now. The excess returns are right here, are 161k, and the moon returns are about 335k. Now I took several variables when I talked about these things. First things first, the first category right here, we cannot play with this. We cannot expect more return than we actually have, because one, the asset that is staked is a stable asset. There's no impermanent loss, and there is no upside potential when the market reverses. The only thing I could add on top of this is the actual token that you are rewarded with appreciating in value. So in the case of PancakeSwap, we're talking Cake, ApeSwap, I think it's the banana token, and Venus Protocol, I think, because it's lending. Even actually, lending in both is not going to affect you because you're going to be rewarded back in stables. But when we talk about PancakeSwap, because it's a liquidity pair, most probably in Cake, if Cake appreciates, you're going to get more. So hence why I didn't variable this part. But the medium risk returns as well as the high risk returns, you can, for example, when we talk about the staking platforms, I specified that because you have the token, you can have the potential to enter ICOs, and ICOs on these launchpads can go up to 20x. I factored in a maximum of 10x per ICO, and if all the amount is invested versus a small portion goes into the excess part and all the amount goes into the moon returns. Hence why if we did 10x's around the board, we can go even higher than 200k in the medium risk. We can go upwards to 500k if we're doing 10x's, 20x. So that's the staking platform. Now PancakeSwap staking is also very stable-ish, I would say, because at the end of the day the APR is stable, can fluctuate between 30 to 40%. Now they mentioned 40% because in my opinion they entered the cake LPs when we talk USD BNB, or they even put them into single staking pools. So average this out, you get about 40%, and if cake appreciates you can go higher. Now when we talk about the high risk part, and this is where it gets interesting, even though the amount invested is small, but if the token appreciates 10 to 20x and you keep on compounding your interest over a period of time and then you start getting some returns, then it could have no limits at the end of the day. But at the same time it could go the other way around completely. So even though I did some calculations here, I cannot guarantee what is the outcome. You can just get a glimpse of what it could be in the case of moonshots, right? And keep in mind that if you sum all of the investments, those are 160k, because 40k they haven't been published yet. I think on DBank you can see them, but on the portfolio investment, on the portfolio dashboard, you can't. So at 40k you can expect more returns of whatever I just showed you basically. Now one thing I'd like to add is that I showed you all the investments right now across the board. So everything that has been gathered in staking fees invested in several protocols. Now many would argue that yeah, it's not enough to pay out the rewards that are going to potentially come after several days when push comes to shove for investors. I agree. I completely agree, but keep in mind that first things first, this is the start, this is the beginning. Transparency and honesty are very valued in this space, and them showing you everything, where everything is invested, I would say, is pretty impressive. Not many, and I would argue that there's a very small percentage of protocols that do this. Now you have to give it time to grow. As more people enter, as more money is gathered, more investment, more yield is going to be generated. So as time goes on, this will keep growing. Again, you have to give it time, you have to be responsible and not reckless. That's what I'm going to be doing, and hopefully my community, and I expect everyone involved in Wealth Mountain to do the same. And I would argue that perhaps future investments can be put as a community vote, and this is something that is on the checklist actually in the portfolio dashboard, and I showed you this. So just have opinions from the community about where investments, future ones, can go. So that is something that I think can be useful, and I'm really excited to see where all of this goes. Now that's it from me today. Thank you for sticking around and listening to everything I had to say. Now, I mentioned everything, all the updates that have been happening. I'm gonna always keep pumping the Wealth Mountain videos to keep everyone updated. Like I said, I'm pretty excited. I want to see where this goes, and I have full confidence. Now, I'm not gonna touch base in details about the weekly recap. You can go to the Telegram channel. It's a picture, it's just a picture. It shows you everything that I basically spoke about in details right now in this video, so you can go check the bullet points of everything that has been discussed. Also, a sub to the channel would be amazing. It really helps us new kids around the blog dish out better content and give out more value to everyone. Also expose this word we love the most to more people. So I thank you and appreciate you in advance, and as always, take care of your finances and trade responsibly. This was Roy with DeFi Ascension. Thanks for watching.